Why are the markets rising so much? It's January 7th, 2021. This is Krim Dalko. This is the Not Even Wrong podcast. This is the first podcast after the new year. So we have a new counting. We have adjusted our NAV. So since January 1st, so since the adjustment of the NAV, so year to date, we are up about 21%. The market is up roughly, let me give you that number also. The market is up roughly 1%. So we are up 21%, the market is up 1%. Why are the markets rising? It was an eventful week. The first week, in particular politically, we had the actual concession speech by Mike Pence. We had Congress approving new president-elect Joe Biden. So this is done. We had lots of turmoil, but this is not a political podcast. So I'm just going to go straight right to the point here. We believe the markets are pricing in a certain scenario which is politically and macroeconomically driven, and I want to talk about this scenario. This is the key of this episode. So we have Joe Biden Kamala Harris as new president and vice president. We have Congress and Senate on the side, the whole of Congress, so Senate and the House, both also Democrat, and therefore we have a pretty straightforward situation in Washington. That's good news because that means it's going to be easier to pass legislation. The main expectations of the markets are that we'll have inflationary pressure in the economy. People are hedging themselves by buying Bitcoin, metals, and stocks, particularly growth stocks. Now, I want to discuss this thesis. I think there are three scenarios in any kind of macro environment. Number one, inflation. Number two, deflation. Number three, what I call robust growth. So that is growth with a little bit of inflation, but more growth than inflation. And let me try to elaborate the third one first. What is robust growth and how is it different from inflation? Well, inflation is when you literally print money, inflate the economy, so things get more expensive, but things don't really change. So your doctor is more expensive, but your doctor's visit is the same. Your school is more expensive, but your school is the same. Your wages are going up, but you're just doing the same job. That is inflation. Robust growth is that things are getting a little bit more expensive here and there, but because we have growth, we have more competition, we have more innovation, we have more disruption, we have more fundamentally new concepts and engineering practices applied with large impact, which means that overall, your next doctor's visit might be actually cheaper, or it is the same price and you get a lot more value out of it. Your Tesla drives itself. Your Tesla can be used as a robotaxi one day. Your cloud computing service becomes cheaper or more powerful or both. Your gaming console is either less expensive or the same price with 3 times the power. We have Moore's law in healthcare, particularly through CRISPR and and base editing. We have much faster turnaround in genetically engineered cells, so we can maybe cure cancer for 10x or 100x less. That is robust growth. So we have deflation, inflation, robust growth. I think deflation is out of the picture here. We have the implied inflation measured by treasury bonds and tips, which for the first time in a while has gone over 2%. So we have a 2% implied inflation for the next 30 years. That is much, much better than any kind of deflationary economy that we have in Japan or Europe. So let's say the market is putting deflation out of the picture. Inflation versus robust growth. Those are the two scenarios that are most likely under a Biden-Harris administration, actually under almost any administration, but particularly this, because we believe that in this type of administration, we will have inflationary pressures, we will have more stimulus, but it's not that different, to be honest, because the Fed is the real 800-pound gorilla here, and the Fed has been printing money and helping the economies around the world anyway. And if we really look at what Democratic administrations have done over the last 30, 40 years, I would say, this is a completely neutral statement in terms of which side I'm on, I just want to say that I think Democratic administrations typically actually do more for the economy, do more for entrepreneurs, and do more for growth. Because in the end, at least the center of the Democratic Party believes in opportunity and believes in the possibility that people can create lives for themselves. While on the right side of the aisle, I think it's more about preserving what you have, and there's less flexibility to actually have upward mobility. So this upward mobility is what I'm pointing at. So I'm not talking about crony capitalism. I'm not talking about protecting the oil industry or any of that stuff. I'm talking about enabling new technologies and innovations and concepts to actually proliferate in the market to change things, particularly, let's say, alternative energy, which is one of the things that people think Biden Harris will promote. That is something that I think has a better chance under a Democratic administration. It had a good chance under Trump too, but I think it was more the states which were driving it. And this is another very important point. Everybody's obsessed about Washington. In the end, a lot of economic policy happens on the state level, particularly in the big states such as California. So it's actually a lot more important what the big states are doing. And now with the Democratic administration in place, with the House and the Senate on the Democratic side, there is less need also for California to be extreme. So I think overall the forces in politics are going to be, I would say, benign and entrepreneur friendly. The downside, of course, is taxes. We will have higher taxes. That is a problem. It affects us, but that's okay. I mean, in the end, taxes are always paid as percentage of earnings. So if your earnings grow, you will have more money in the pocket. And I don't want to talk about taxes here, but that's of course the downside. And let's say as long as income tax and capital gain tax are increased moderately, it's fine. If they're increased extremely, then that's bad. Of course, it's bad. And if we have wealth taxes and things like that, that's a disaster. And would even lead us to think about relocating because it's impossible to live in a country with a strictly enforced wealth tax. That is a police state and not very interesting to live in a place like that. So to summarize, we have inflationary pressure or robust growth. Now let's talk a little bit about inflation. What is actually inflation? Inflation in the US is driven by three things. It's labor cost, cost of living, and then the third bucket, which I call health, safety, security, and health, safety, and education. So those three, transportation and food, are not in there. So oil and all that stuff is excluded from inflation, rightly so, because that's very volatile, and you have these bounces of inflation and deflation all the time, which really aren't showing you the cost of living I think that most Americans actually face, which is, like I said, it's on the one hand the cost of housing, education, safety, and health, and on the other hand, it's how much money you make. So if you start making more money, then all these other things go up. It's possible that these other things go up and you don't make more money, which is exactly what has been happening to the middle class in the U.S. That's why there is a poorer middle class in the U.S., unfortunately. But let's talk about these things. So labor cost, I think, has a good chance of increasing for two reasons. Number one is COVID is going to make labor more expensive through restrictions, safety measures, and all that stuff. And second, I would say that in a entrepreneurially driven economy with growth, you will have more tension in the labor market, particularly for qualified personnel, but I wouldn't say it's dramatically different. I think housing, I would call that a flat one, because with housing, we have the migration away from the coasts into the inland. So prices in Austin, Texas, or Utah or Nevada will go up, but the prices on the coast will come down. And since they're much, much higher on the coasts, I would say that the all in all housing should be flat to down. Where I see robust inflation is on health, education, and safety. Safety being army, police, things like that. Health is unfortunately driven by Aram's law and the Baumol effect in healthcare, where you have this problem that healthcare workers are not very productive, and they live in cities like San Francisco, where everybody else who's working at Google and stuff makes a lot of more money. So in order for the nurse to survive, she has to make more money too, but she's not very productive. So that drives inflation in the healthcare system. I think we have, with COVID and with the money printing, this is, I think, directly related. So I think the largest bounce in inflation will come from these three sectors. Again, safety, education, and healthcare. I think education, I can speak for myself. We were sending our kid to a public school, and now with the social justice warriors in San Francisco going berserk, we are probably going to be forced to send our kid to a private school, which adds tens of thousands of dollars to our education bill. And it's unfortunate that this is happening for many reasons, not just financially, but it's happening and it's going to increase inflation for our household. And I think a lot of people are in the same boat. So we are looking at a possibility of up to 5% inflation over the next 10 years on average in the United States. In this kind of scenario, it makes a lot of sense, of course, to buy gold and Bitcoin and all the other metals. Stocks should be fine too. We will have a correction at some point because an inflation rate like that will have to drive rates up. It will have to also punish leverage at some point. The timing of that, of course, is impossible to call, but I would say it's definitely not going to happen in the next few weeks. This is something I'm looking at more in a year or two. The good news, though, is there's also a third possibility, what we call robust growth. We shouldn't forget that. There is a possibility. We have enormous innovation in the economy. We have a couple of large problems being solved. One of them, the electric intelligent car, solved by Tesla. Interplanetary travel, also solved by Elon Musk through SpaceX, is also important. I wouldn't call it as impactful yet, but it could be. I'm thinking about CRISPR, of course, the digitization of biology, the merger of biology and informatics, and the enabling the Moore's law in the field of life sciences is enormously driving down prices and increasing values. So there's a possibility also for less inflation in the healthcare sector. We have quantum computing. That's a field that, as some of the listeners know, we have been working on for years. The problem with quantum computing is that it's not ready yet for prime time. We believe that once it is, it will have nonlinear effects, massive growth effects, and massive value generation. But that is right now not the case. I still want to put it on the list because it's one of those things that we believe will have enormous impact on society and the economy. We believe that cryptocurrencies have been neglected by us, and that has several reasons, but they are happening, and there's no way around them. Some of it is good, some of it is bad, but overall they have the potential to become interesting situations for, let's say, micropayments, micro contracts, machine-to-machine contracts, things along those lines. So that also is something we want to put in the basket of potential robust growth and innovation in the economy. So to summarize, we have these scenarios that we outlined here: deflation, inflation, robust growth. We think deflation is off the table. Inflation is a possibility. In order to hedge against inflation, assets such as Bitcoin, metals, and stocks are, at least for the next couple of years, definitely interesting. And then we have robust growth, which is more or less a stock market story, a massive growth through innovation, through fundamentally new concepts and engineering practices, and also strong dollar in that case, and a stronger currency than currently expected. I think this will be a surprise. I think this is not expected right now, and this is definitely something we want to keep optionality for ourselves in our positioning in case we actually had robust growth. In case that happened, we want to be exposed to the upside for that. Thank you.